Charles Henry Dow was an American journalist known for co-founding Dow Jones and Company, a major financial news services with Edward Jones and Charles Bergstresser. Dow's contribution to financial world were significant. He was the first editor of Wall Street Journal, a prominent newspaper in the finance industry. Dow also played a crucial role in the establishment of the Dow Jones Industrial Average, a widely used stock market index first published in 1896. Charles Dow was born into a farming family in Starling, Connecticut on November 6, 1851. Following the death of his father in 1857, he pursued a career in journalism and financial analysis, ultimately co-founding Dow Jones and Company and shaping the landscape of financial news reporting. Dow's most notable contribution to finance is the Dow Theory, and his role in creating the Dow Jones Industrial Average provided investors with a valuable tool to gauge the overall performance of the stock market. Dow, at the age of 29, found work at the Kiernan Wall Street Financial News Bureau, which delivered by messenger handwritten financial news to banks and brokerages. When John Kiernan asked Dow to find another reporter for the bureau, Dow invited Edward Davis Jones to work with him. Jones and Dow had met when they worked together at the Providence Evening Press. Jones, a Brown University dropout, could skillfully and quickly analyze a financial report. He, like Dow, was committed to reporting on Wall Street without bias. Other reporters could be bribed into reporting favorably on a company to drive up the stock price. Dow and Jones refused to manipulate the stock market. The two young men believed that Wall Street needed another financial news bureau. In November 1882, they started their own agency, Dow Jones Company. The business's headquarters was located in the basement of a candy store. Charles Bergstresser was the chief financier of the company but chose to be a silent partner. The first index was created in 1884 and was originally known as the Dow Jones Railroad Average. It consisted of 11 stocks, including the New York Central and Union Pacific, and two non-rails, Pacific Mail Steamship and Western Union. It was published in the Customer's Afternoon Letter, a daily financial news bulletin which was the precursor to the Wall Street Journal. The first calculation of the Dow Jones Industrial Average was comprised of stocks of 12 different companies in the industrial sector. The average started at 40.94 points. These companies were selected specifically to represent major areas of the U.S. economy following the recession in the late 1800s. Companies included in Dow's original calculation were American Cotton Oil Company, American Sugar Company, American Tobacco Company, Chicago Gas Company, Distilling and Cattle Feeding Company, General Electric, Laclede Gas Company, National Lead Company, North American Utility Company, Tennessee Coal and Iron, U.S. Leather Company, and U.S. Rubber Company. In 1889, the Dow Jones and Company had 50 employees. The partners realized that the time was right to transform their two-page news summary into a real newspaper. The first edition of the Wall Street Journal appeared on July 8, 1889. It cost 2 cents per issue or $5 for a year of subscription. Dow was the editor and Jones managed the desk work. The paper gave its readers a policy statement. Its object is to give fully and fairly the daily news attending the fluctuation in prices of stocks and bonds and some classes of commodities. Dow often warned his reporters about exchanging slanted story for stock tips or free stocks. Crusading for honesty in financial reporting, Dow would publish the name of the company that hesitated to give information about profit and loss. Soon after that, the newspaper gained power and respect from the reading public. By 1916, the number of stocks in the Dow Jones Industrial Average rose to 20 and again rose to 30 in 1929. It crossed the 1,000 mark on November 14, 1972 and reached 10,000 mark on March 29, 1999. Throughout most of its history, the stocks on the index have been listed on the New York Stock Exchange, but in 1999, Microsoft and Intel, which were listed on the NASDAQ, were included. While General Electric is the only one of the original 12 stocks that are still listed, though it was removed and reinstated twice, many of the other original 12 have merged into other companies which are included in the Dow Jones Industrial Average. Although Dow Theory have been around for almost a year, its fundamental ideas are still relevant in the today's unpredictable and technologically advanced market. Dow Theory is a technical analysis and price action framework that was created by Charles Dow, improved upon by William Hamilton, and articulated by Robert Rhea. A lot of the concept and statements made by Dow and Hamilton later become Wall Street axioms. There are 6 main components to the Dow theory. Number 1, the market discounts everything. Stock price quickly incorporate new information as soon as it becomes available. Once news is released, stock prices will change to reflect this new information. On this point, Dow theory agrees with one of the premises of the efficient market hypothesis. Number 2, there are 3 primary kinds of market trends. They are primary, secondary, and minor trends defined by their duration. Primary trends can be uptrend or downtrend lasting months to years, while secondary one moving opposite to the primary will last weeks or a few months. Minor trends are treated as insignificant variation lasting from few hours to weeks, and they are not as important as the others. Number 3. Primary trends have 3 phases. Bull market phases are the accumulation phase, the phase when prices rise alongside an increase in volume. Public participation or big move phases, where retail and average investors begin to notice the upward trend and join in. Generally, this is the longest phase. Excess phase, the market reaches a point where experienced investors and traders begin exiting their positions while the larger average investing population continues to add to their positions. The bear market phases are distribution phase, where news of decline begins to be distributed throughout the investing community via various channels. Public participation phase, which opposes that the bull market participation phase, where average and retail investors are selling stocks and exiting position to reduce losses. Again, this generally is the longest phase. The third and the last is the panic phase, where investors have lost all hopes of a correction or full reversal and continue selling at scale. Number 4, indices must confirm each other. Multiple indices moving in an identical pattern reveal a trend since they give the same signal. Whereas if 2 indices move in the opposite direction, it is difficult to deduct a trend. Number 5, volume must confirm the trend. Trading volume increases during an uptrend and decreases during depression. Number 6, trend persists until a clear reversal occurs. Traders should be aware of trend reversal. It's easy to confuse them with secondary trend, so Dow cautions the investors to be careful and confirm trend with several sources before believing it's a reversal. In personal life, Dow married his wife Lucy at the age 30, who had a daughter from previous marriage. The couple had no children of their own. In 1902, Dow began to have health problems and Bergstresser wanted to retire. The two sold their shares of the company to Clarence Barron, the Boston correspondent. Dow wrote his last editorial in April 1902. About 8 months later, on December 4th, 1902, he died at his home at 161 Lefferts Place, Brooklyn, New York, at the age of 51 after suffering a heart attack. Charles Dow's pioneering work in financial journalism and market analysis laid the foundation of the modern stock market reporting. His theory and the Dow Jones Industrial Average remains integral part of the financial world, guiding investors and analysts in understanding the market trend and making informed decisions. Dow's legacy underscores the importance of insightful analysis and comprehensive market understanding in the world of finance. His contribution continues to influence investors and analysts, emphasizing the enduring impact of his work on the field of finance. This is the story of the father of modern technical analysis, Charles Dow. Check out our other videos on the greatest investors of all time.